afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's 692nd installment. Traders, we are here every day and every night doing analysis on charts, on markets to see what's going to happen next. Remember that futures trading is risky and can cause substantial financial loss. Traders, what are we going to talk about in this video this evening? Well, this video is being filmed on Wednesday evening for trading Thursday. That would be February 10th, 2011. February 10th, right? Yes. February 10th, 2011. You know, we're always filming the night before, so every time I say that date, I never know what date for sure I should be saying. All right, so, what's on the board? Continuation patterns, traders. What is a continuation pattern? That is a pattern in a market. Let's say you have a bullish market. It does something a little bit odd. Is called a continuation pattern because it continues on in that direction. So we are going to discuss continuation patterns. We have number 2 on the board, the euro looking bullish for trading on Thursday. Euro looking strong here. Third on the board, the swing day in sugar negates any further selling. We had a great short trade in sugar last night into today. Worked just fine. I am here to say there is a swing day on that sugar chart as of today. It negates any further selling for this week, at least for Thursday, probably Friday. So sugar trade, perfect on the downside, but now we're out of it because overall sugar's been in a bull market. If you do get lucky and you get short in a bull market and you make a few points, you're supposed to stop trading from that side and get long on that dip. So we got short sugar, it came off. I don't really want to chase the downside any further. Congratulations to you. OMNI actually did play the sugar. That was a big windfall. Okay, so continuation patterns. They are on the indices charts. They are on currency charts. I think you will like what you see, and it is very clear. It's easy to spot. It's easy to see. You'll know what to do with those formations. Again, euro looking strong, and I got to show you that swing day in the sugar. Traders, if you like the technical analysis lesson that you are about to get in this video, please come see me at my site. It's www.livewithoscar.com. Jump into my free trading rooms. Don't trade alone. Come on in. I am at the helm of those rooms, and I am there to help you at all times analyze charts and figure out where markets are going to go. For you traders that are on the go, we do have our OMNI on our mobile devices. You can get OMNI on any mobile phone that has internet connection. Just go to m.livewithoscar.com. Look at our site. You can view the OMNIs, the flash updates, see the charts we post. Take a look. All right, traders, so I'd like to get right into the charts in this video. I want to teach you a lesson about continuation patterns. I want to show you that swing day in the sugar, and I want to show you why euro has that green OMNI, and I love when green OMNIs are out. So with no further ado, let's go look at some charts. Okay, traders, the first chart before your eyes this evening is the Dow Jones Transportation Average Daily Bar Chart. Traders, this is deemed our leader of U.S. indices. And let me tell you, it has been doing the job of leading U.S. indices for many years. If you look at this chart right now, you will recognize that there's some things going on here. Traders, I am here to tell you that a head and shoulders pattern in a bullish market is nothing more than a continuation pattern. It's like a zigzag. Continuation pattern. Another one. Continuation pattern. Now we have a third one. It's probably another continuation pattern. What else is on this chart that's a continuation pattern? You see that little diamond right there, traders, in red? Looks basically like a diamond. Well, look at the big breakout bar that ensued right after we came out of that diamond. It went all the way to here, and the next day went all the way up to here. 2 big bars. Well, here we are, continuation pattern, and a diamond right here. So I drew in what the next couple of days' bars should likely turn out to be, or what they should look like, and here they are. Again, you came out of this diamond and had a big run up. We have another diamond now that is another continuation pattern. So you have your head and shoulders continuation patterns, 1, 2, a third one here. Then you have a diamond which built and it blew out to the upside. Another diamond finished completely and ready to blow out, likely towards the upside, and it's the leader of U.S. indices. So I say we back off on the ES for the first part of this trading session on Thursday and allow the leader to tell us if we will move higher or not. I say it moves higher. I put my neck out here on the line right here on this video and say that blows out just like this blew out, and this becomes a continuation pattern just like the two before it. But we shall see. That's what stops are for, and we are going to take a backseat approach till we come completely out of this diamond and blow out towards the upside, if that will be the event. But I wanted you to recognize these continuation patterns because many traders think that this is a top because it's a head and shoulders. And a head and shoulders this small in a market as large as the Dow Jones Transportation Average could not possibly be a top. You would need a monstrous head and shoulders to consider some sort of a top, and that is not what we have. We have small ones. We continue higher. Let's look at another chart. Okay, traders, here we are. Next chart, the DAX. It is the German stock market, right? The DAX daily bar. Staying with the theme of continuation patterns, look at the one we have here. A bull flag is a continuation pattern. You have a flagpole, which is a series of quick run-up days, creating a flagpole. Then you have a sideways consolidation, creating the flag, and it blows out. It continues. What else do we have on this DAX? Continuation pattern, head and shoulders, and it worked really well, right? Up, down, zigzag, leads up to another head and shoulders continuation pattern, and it worked really well. I am here to show you that head and shoulders, when they're small in a large bull market like the DAX is in, is merely a continuation pattern towards the upside. That's the way continuation patterns work. So you've seen the continuation patterns in the transportation average, which is the leader of U.S. indexes, and we expect it to pull the indexes higher. Then I've shown you those very same continuation patterns showing up on another chart, the German DAX, as well as the bull flag. It started with a bull flag, ran into this beautiful channel, then put in continuation pattern after continuation pattern. So you have to like the DAX here. Maybe not this particular evening, but overall that's a beautiful picture. So you like the DAX based on its continuation patterns, undoubtedly, if you're an analyst. Let's look at another chart. Okay, traders, the third chart before you this evening is the Euro currency daily bar chart. That's the one that's got the green OMNI arrow for trading on Thursday. And as you can see, it is clearly in a very well-defined parallel channel. But what else is there? Look, traders, a continuation pattern develops, basically showing us that we are going to move higher. There's your continuation pattern, zigzag up to new highs. Inside the channel, you gotta like the euro, and the dollar looks bearish while the euro looks bullish. Let's look at another chart here. Traders, sticking with the euro, just to let you see some of the internal indicators that are causing us to recognize the bullishness in the chart structure and in the technical indicators. Your slow stochastics have pointed up now, and they're pointing towards the upside. Relative strength index, or RSI, clearly pointing towards the upside. Commodity channel index, or your CCI, clearly pointing on the upside. All of this is in the 6E, or the euro. Technical indicators very bullish. Continuation pattern looking bullish. Euro should have an up day on Thursday. Let's look at another chart. Okay, traders, last chart this evening is the sugar March daily bar chart. The sugar has been in a pretty strong market. You had a rally, put in a high, right? Came off, put in a newer high, came off, put in a higher low, rallied up, put in a higher high, came off so far, put in a higher low, and on this higher low, it turns out to be a swing day today. As of Wednesday's settlement, there is a swing day in sugar. That becomes bullish. We are no longer selling sugar. We are looking for the upside in sugar on Thursday. So for you OmniX that followed us on the short side of Sugar Wednesday, that was fine. Forget it. Do not chase that trade down. You had your one-day trade. We are short-term day traders. Here we are, something different for Thursday. I do not think I'm even going to bother with the sugar, but I want to let you know that there is a bullish indication as of Wednesday's close. You probably don't want to be short the sugar again. So, traders, you've seen the charts. There is my technical argument for three things. Continuation patterns. When you see a head and shoulders in a bullish market, if it's a smaller type head and shoulders, it is considered a continuation pattern, and away we go. You also see those diamonds I had there for you, traders. They don't show up very often, but once they're populated with trading bars, they usually break out in the direction of the market's structure. In other words, if that was in a bullish market, you break out to the upside. If you see a diamond in a bearish market, you break out towards the downside. It is a continuation pattern, as is a small head and shoulders in a bull market. The euro looking strong. You see that nice channel it's in, and you see the continuation pattern head and shoulders, so you gotta like the euro. And that swing day in the sugar, traders on that swing day or on that sugar chart, there were 3 to 4 swing days already boxed off on that chart for you to see, and each one of those swing days created a move in the opposite direction. So watch out trying to sell sugar again on Thursday. I do not think that's the move to make. Sugar back up again. Okay, traders, so there it is, my technical argument for trading on Thursday. Do not forget that a stop is your best friend, and you should never, ever, ever trade without stops. Put your stops in first. Keep your emotions out of trading. One of the best things you can do to help yourselves with keeping your emotions at bay is to say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.